We're discussing measuring economic performance, and we're starting with one of the three major macroeconomic variables, gross domestic product. And we've learned that the definition of gross domestic product is the final market value of all goods and services produced in a period of time. All right, so it has to be produced in a certain period, and it has to have market value. There are some things that you spend money on and earn money on that are not going to be included. We're going to learn that GDP is made up of an expenditures approach and an income approach. If you spend $1 on buying a good or service, somebody else catches that dollar as income. So gross domestic product income will be equal to gross domestic product expenditures approach. So again, there are going to be some transactions we're going to exclude which are income related or expense related. The first transaction that we're going to exclude from GDP is public transfer payments. These are financial transactions. And so a public transfer payment is, for example, is Social Security or welfare. These people are not producing anything, and so there is no good or service produced in a period of time. Instead, what happens is someone has worked, someone has been a factor of production, land, labor, capital, or entrepreneurship, and those people have paid into the Social Security or welfare system, and that money is redistributed to these people. So if you counted it both as a factor of production and when you paid it to Social Security, you'd be overcounting GDP. So you only count it when it's earned, not as a public transfer payment. A private transfer payment is a gift, for example. So you give someone a gift at Hanukkah or Christmas or their birthday. Well, it counted when you earned the money as a factor of production. But then when you gave it to somebody else, you can't count it again because nothing new was created. So private transfer payments will also be excluded from GDP. The stock market and the bond market. There are trillions of dollars spent every day in the stock and bond market, but nothing new is produced. Stocks represent ownership of a corporation, and so they're just trading it back and forth, but no new goods have been produced, so that is not included in gross domestic product. Second-hand sales are also excluded from GDP, because if you buy a 1969 big block Corvette now, nothing new has been produced. Instead, it was counted in 1969 when it was first produced. So let's do a worksheet and explore this and pick some examples and see if we can apply this. All about GDP. Is this counted as part of GDP? So, a monthly check received by an economics student who has been lucky enough to be granted a government scholarship. This is not included in GDP because it's a transfer payment. Nothing new has been produced. A farmer's purchase of a new tractor. Now, a new tractor is a capital good, and it has been produced in this year, so yes, that would be included. A plumber's purchase of a 2-year-old truck is not included because it's a second-hand sale. It was included in the gross domestic product 2 years ago when it was first produced. Cashing a U.S. government bond is not included because it is a financial transaction. The government is borrowing money. Nothing has actually been produced. The services of a mechanic in fixing a radiator on his own car is not included because there is no market value. Gross domestic product is the total market value of goods and services produced in a period of time. Since the mechanic did the work on his own car, there is no bill, there is nothing to measure. If he paid someone else to do the very same work and got a check, a bill for that, and paid it, then there'd be something to measure. You clean your own apartment. There is nothing to measure, although something has been produced, a service. If you pay a maid to do it, and then there is something economically to measure. There is something of value to measure, and you will include it. Since he worked on his own car, there is nothing to measure. It is excluded. A Social Security check from the government to a retired store clerk is not included. It is a public transfer payment. Nothing new has been produced. An increase in business inventories is counted because something has been produced. Even though it hasn't been sold, it has been produced and is available for consumption. And so the final market value of all goods and services produced in a period of time, that would be included. Yes. It would depend, though, on the inventory. If the inventory is a final good that has not been sold, it is included. If the inventory is a partially completed product, it would be excluded because it is not it has to be the final market value of all goods and services produced in a period of time. So if the inventory is only partially completed, it would not be included. In this example, we'll assume that it's like a car that's been manufactured but not yet sold, and it would be included. And we'll discuss that in the notes in a later session. The government's purchase of a new submarine for the Navy is included. Economic activity that has actually been occurred has a market value. A barber's income from cutting hair, yes, that's a service. Income received from the sale of Nike stock, that is a financial transaction and is not included. So when we talk about gross domestic product, the final market value of all goods and services produced in a period of time, you're spending money on things, and we want to include those things that are goods and services, have value, and include them. But there are some things you're going to spend money on or earn money from that will not be included, and here are some specific examples.